Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, in the last 48 hours, the Australian dollar refreshes its 5-month highs after claiming the 71.15 objective and now puts to question amongst traders whether a short squeeze is in play. Looking at the technical aspect, we are overbought, however the ADX is trending and therefore could see any movements towards 71.35 to 71.60 as initial squeeze, but may find a little difficulty in upholding and therefore could see a sharp rejection and profit taking emerge and see a move back towards a region of anywhere of 70.80 to 70.45. Looking at the euro, well, as we can see, there has been numerous attempts to take out the level of 109.4060 and therefore failed, and the market is actually backing away quite sharply. All eyes later today looks towards the US Federal Reserve's preferred and most reliable inflation indicator, and that is the Personal Consumption Expenditure, or the PCE, price index. Along with that, we also have the core PCE as well. It is the fourth quarter of 2022, and it will be released later Friday, which may shed some light on consumer spending, income growth, and along with that, inflation. Following into the start of next week, the US Federal Reserve will also be meeting for its rate decision between the 31st of Jan to the 1st of Feb. Traders are hoping the message will deliver a more dovish turn and hopefully see a hike of 25 basis points. If so, it would take the Fed's benchmark borrowing rate to a target around 4.5 to 4.75. Also, in overnight, a better than expected GDP, or the gross domestic product, report increased at a faster than expected 2.9% annual rate in the fourth quarter of last year as consumers boosted spending on goods. That was released from the Commerce Department. So looking at the technicals, as I mentioned, the market is backing away from the 109.4560 as the dollar index, which measures the greenback strength against a basket of 6 major currencies, remains directionless at 101.5060 and above the key level of 101.15. I do anticipate the market may pull back to somewhere around 108.55 to about 108.10 before profit taking emerging. Technicals are somewhat heavy, does support this view. The dollar yen, well, it still remains somewhat directionless as well, with same as with the US dollar, as the sideways pattern has continued for at least 4.5 days. And since the break of this level around 129.5, little momentum has come from the break, and therefore does give some concern that we might see a pullback. That could be anywhere towards the region 129.45 and the base holding around 128.30.45. Technicals are somewhat mixed, so therefore this gives the view that we might get this pullback. But while remaining above this downtrend that was once resistance, now support, could see further gains to a target of 131.7090. Having reached the objective of 124 for sterling, the market pulled back to 122.60 and bounced. Now holds somewhere around near the 124 area. I do feel that the technicals are still somewhat heavy and therefore unlikely to see this 2-day gain sustain, and may pare back and look towards the bottom side of the range, anywhere from 122.30 to 122.90. Wrapping up with oil, for the upside challenge towards 1,950 to 51, the market backed away quite sharply, and from there has put a bit of a bearish pattern in play as the market breaks down heavily, with both indicators dropping quite sharply. I do feel that we could see any decline that may register a low around the close 1,900 and reassess from there. We nearly reached, well, pretty much reached its top side objective, and therefore has put the profit taking back in now to see this move to the downside. And wrapping up with oil, well, it would seem that we've got a battle between the bulls and bears as we hold within the range of 78.5 to around 81.5 to $82 a barrel. However, we are seeing a little bit more momentum coming back into today's session, so therefore let's see if the market can again reject that top side. If so, I expect to see another down test. Well, that wraps it for the day and for the week. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the new weekend.